Okay, today is day 2 of the 30-day series, and it is currently January 6th. It's a Tuesday, a newsless Tuesday. We have no news today, and this is my trading recap and my thoughts and opinions. I was also live trading in the Discord, answering some questions, but I did not record any of that because that is unnecessary. Okay, first thing I do in the morning is I get on TradingView, and I have not eaten breakfast. I usually don't, but sometimes I will. And we're gonna look for our daily bias. So if we look on the 15-minute time chart, overnight we had a big move run up, and then London dumped. So to me, this honestly looks like seek and destroy, but we'll see when market opens, because if we look here, we can see that London session swept out the top of Asia, and it swept out Asia lows, right? So if one session sweeps the previous session high and sweeps the previous session low, then typically there's a good chance the next session that it's going to be seek and destroy. So what we can see at open is we could respect this, go higher, sweep this high, and then reverse and sweep all this liquidity below. So we could see something like that, or we could see it disrespect this 15-minute, sweep these lows again, and then come back up and sweep those highs. So those are the two possible scenarios. But let's take a look on the higher time frame. Let's look at the 1 hour. So ES swept these highs yesterday already, as you can see here, but we left equal highs on NQ. So this currently is like a higher time frame SMT here, but we could see this liquidity getting run. All depends if we start respecting this 1 hour bearish fair value gap or not. Not really seeing any SMTs down here. So yeah, at open at 10, if we can close over this 1 hour gap, then I could see us going higher. If not, then it could be a range day, or we're going lower for some of this liquidity down here. And let's take a look on the RTH. So yeah, there's still this really big RTH gap here. So like I said, we could dump down at open and then reverse for the highs, or we could go for the highs and then dump lower. So it's all about what we want to target. I'm going to look when market opens. I'm going to take a look if my setup forms, and my setup is going to be just what this is at the top right here. So my entry function is going to be a unicorn. I need an SMT, preferably higher time frame, like 5-minute, 15-minute time frame, and then the unicorn is a breaker and fair value gap. And we also need a liquidity sweep. And I haven't mentioned it on here, but sometimes I also like using order blocks only when it presents itself, and I can use it as extra confluence. I'm not using SMT and liquidity sweep and order block as its own entry function, right? I need the unicorn, and then I'm looking for if there's currently an SMT. Did we sweep liquidity? Are we tapping in an order block? Sometimes I also check, like, are we in 50% of the range? And then sometimes I look at the fib, so we look like at a manipulation leg. So let's say this is the manipulation leg, right? From London, we come up, we sweep this high, and we come back down when we break that previous low that we made, right? So now we're going to use the Fibonacci retracement tool right here, and we're going to click fib, and this is the manipulation leg. Once we broke past it, so we can see where price wants to target. What is lined up at these targets? We have the -2 standard deviation and the -2.5 standard deviation. You see how -2.5 lines up with yesterday's PM low. So that could be a high draw on liquidity. And usually around the level 2, 2.5, and 4 range is when we're going to see reversals. And notice how we sweep the -2.5, also sweeping yesterday's AM low, and we reverse. So that is extra confluence. Don't always have to use that because it won't work all the time, but it is good to know. For example here, so this is currently pre-market. If we take a look at the 1 minute time frame, so if we go, if we see here on the 5 minute time frame, we're not really breaking any structure unless you count like breaking below this 5 minute candle as like CISD, which I'm not too familiar with myself. But we look on the 1 minute time frame, right? We can clearly see, let me remove this. We can clearly see NQ sweeping this high. And if we look on ES, this high has failed to be swept. All right, so we're making an internal SMT. And then on this sweep, we sweep again to the upside and we break lower. Now this could be used as your unicorn model. All right, here's the breaker. There's a fair value gap. We could just enter in on any fair value gap here within the breaker. You know, if you wanted to use like 50% of the range, let's see where that would be. Entering up here would have been optimal, right? But look at this large displacement move down. We left a fair value gap here, and we left another fair value gap here, right? So you never know which one it's going to retrace into. So this right here would have been optimal. You could put your stop loss. Usually, sometimes I like putting it above the breaker, but that's only if the breaker's pretty close to the top of the leg, right? So here I would probably put my stop loss at the top or right here to minimize my risk. And we're gonna target 2R. And it would have played out right there. Would have taken a while, but if you held it out, would have hit TP. And then if you take a look at this manipulation leg, we could see where it was trying to target. And there is 2R, and 2.5 is down here. We didn't get this sweep right here. So we have equal lows right here that we could possibly come sweep for. As you can see, we're trying to do that right now. We swept down to the -2D standard deviation. We retrace back up into this 5 minute bearish fair value gap. We respect it. Same exact thing on ES, and we're dumping down for these equal lows. So we'll see if we get there. And if we take a look here, we'll see if there was any other SMTs on the way down for our confluence. I need to remove this, I can't even see. Yeah, as you can see here, this would be another SMT here. I'm not sure if I would really count that because that's like not really a high. That's like not the proper way to use SMT. So it would have just been this. There you go. So you risk 15 points for 31. If you risked 1 mini on this, open a 300, like $10 stop loss for a $620 gain right there. And then if you want to hold for liquidity, let's say you want to pay yourself on the way down, you could have taken this on like 10 micros, or even like taking on like 8 micros, right? And you partial out 4 of them when we break this low, pretty much at 1R, and then you hold the rest all the way down to this liquidity. So it would have been 43 points with 4 micros. What's that, like 80 times 4? It's like 320, and then you would have partialed out 4 here, which is like 20 points, so 40 times 4, 160. So you would have made like $500, $600 just like that. And you could have paid yourself. So let's say when it swept here, let's say it reversed all the way back up to your break even, you wouldn't have gone off a break even, you would have profited some money. because there are a lot of times where price is choppy, like yesterday, and it doesn't really want to go to your target immediately. Okay, so starting into the day, we have open right here at 9:30, and once again my bias was seek and destroy, sweep this, and we go lower, or sweep lower and go higher. And right off the bat, when market opens, if we go onto regular trading hours, we can see this big RTH gap right here. Right, I'm looking for that. So let's go back to electronic trading hours. 9:30, we open up, we sweep this high, and ES doesn't. So we have a big SMT. We have a higher time frame SMT. And I'm looking for shorts, but this structure right here on the 1 minute is not appealing to me. Okay, this is just straight chop. And we have this 1 minute fair value gap right here that we were respecting. However, after we came back up and swept this liquidity again, you can see on NQ, we did not. So we have another small SMT. I immediately go on the lower time frame, which we can see here, that on the 15 second, we disrespected this down closing candle. We leave this fair value gap, 15-second fair value gap. We tap into it, respect it, break lower, and disrespect this 15-second gap. Also this BPR. So I go on the 30-second time frame, and I'm looking for this 30-second fair value gap right here as my entry. I enter right here at 643, and my stop loss is up here at 662. So I'm risking 19 points. And I set my TP down here for 617, which is 26 points, because that's all I needed to pass. Okay, I don't need to hold for higher liquidity or anything like that, and I'm glad I did, because after we swept this low, we immediately reversed. And I'm going to explain why this, in my opinion, did not sweep these equal lows down here. So going back to trading view, we can see here, look at ES. Look at how ES SMT down here, hold on. ES came down here and made equal lows. It tapped this level, made an SMT with NQ, right? And then at open, we displaced higher, and if you look at a 5-minute time frame, we're still respecting this 5-minute fair value gap. And we also have a 5-minute order block right here. 5-minute order block, we tap down into it, we leave 50% of the 5-minute gap open, so this is consequent encroachment. Right here, we leave 50% of it open, this, and we push higher. So you can see on the lower time frame, we come down and we sweep 928. We sweep this level right here and make an SMT. Right, so we have a liquidity sweep, SMT, and we reverse higher. Now we can go back to the lower time frame, because as you can see here, we're just pushing straight up, right? We don't retrace to any of this, but if we drop down to a lower time frame, we can see here on the 30-second, it creates a unicorn. Let's drop to the 15-second, unicorn right here, and we tap into this 15-second fair value gap. Now, for an optimal entry, I would have tried to enter right here at 653, right? Because I want to use, hold on, I want to use a fair value gap inside of the breaker with my stops either at the bottom of the breaker or the bottom of the manipulation leg. So I would not have entered this, but however, if you did, would have immediately went to 2R, super easy, and our draw on liquidity today after we had the move up is higher. You can see here this level at 708 is our draw on liquidity, because look at ES. Look how strong ES is with all of these equal highs right up here. So this is the draw on liquidity for NQ. After we sweep this, I'm looking to see if we reverse or continue higher. And you can see we sweep, come down, tap this 1 minute, respect, and we push higher. So my next target is 819. Why? Because we have on the 1 hour all of this liquidity, these equal highs up here. And on ES, we have this next level up here with a lot of liquidity. As you can see, we have all these highs stacked right here coming up. But this is a very bullish move that I'm not sure will happen today. So it's not really a trade that, or something I'm looking for it to take, right? But if we get the setup, we'll take it. So I was sitting here and I was watching. There's a 15-minute gap at this level right here. We come down, sweep it. I was looking for this big 1 minute to get inversed, but then a 5-minute opened up and we respected it and we dumped lower. So I did not take a trade after that. Didn't have anything to trade, but you know, always still watching. Watching is learning. You can only learn how to trade by watching the market. Okay, don't believe in people's courses or whatever they're trying to sell you. You know, it's like, what's that one quote? It's like, you're better having time in the market than trying to time the market. You know, it's like that. And that concludes January 6th. It's a Tuesday, newsless Tuesday. My trades for today, what I took, why I took it, and my profit. My P&L is $1,545.96, and my cash amount is $53,030. And my take profit was $53,000, and we have a leniency of $100 because it's 50% consistency on the core account. So this will be passed by the end of the day, and then tomorrow we'll start our funded fresh.